Hi there, welcome to Kneppy Invest. The market is currently up 1.7%. I'm recording this video 26 minutes after the markets are open. And the reason why the American markets went on a little bit of a bull run towards the end of trading was because the Fed raised interest rates. So this is sort of sell the rumor, buy the fact sort of play. I'm not sure what the market is doing. Because in fact it does look like they're going to be raising interest rates a fair bit over the next 2 years. So this is a really weird sort of situation where the market's getting a little bit excited because the Fed is doing exactly what they thought they were going to do. That's my opinion anyway. You could have different opinions, but the market is open up 1.7% today. I am fairly happy with that because I have put a little bit more of my cash to play. I bought PayPal shares, I bought Aussie Broadband, ServiceStream, those companies, and PayPal went up 8% last night. I was thinking of taking a position in Alibaba. They went up 36%, and I'm sort of wishing I did take that position because those companies' shares were looking quite good value. They were just China stocks, and there is a little bit of negative sentiment in regards to Chinese companies. In today's video, what I'm going to do is look at 5 companies that did really well on the 16th of March. Share prices of these companies rose between about 20% and 40%. I will be looking at the reasons why, and based off the reasons why and looking at the chart, determine whether these companies are a potential buy right now. At the end of every single day, I like to see the gainers and losers of the day, the companies that perform best, companies that performed worst. There are a lot of resources to get this information out there. I actually do like Hot Copper, what they do, the gainers and the losers, because they weed out some of those companies that can pip trade, so 0.3 cents, and if they go up to 0.4 cents, that's an automatic 33% rise in share price. So I want to weed those companies out of these sort of lists. A few other sites I do use don't do that, and you'll get a lot of the best performing companies, those sort of companies that rise 33% because the share price is so low. So I do like what Hot Copper does here. And on the left-hand side here is a screen grab from Hot Copper, the gainers. I'm not going to have a look at the losers, but the best gaining or best performing company on the 16th of March was Australian Vanadium Limited. Is that how you pronounce it? Vanadium? They were up 40%, finished the day at 4.9%. So in all these situations, I'm going to look at what caused the share price to rise. A few of these other companies I won't look into. Fosco, Cunico, MPG, Many Pearl Gold was an IPO, so I'm going to totally ignore that. Electro Optics up 22.4%. Really happy with that because I am a shareholder of that company. And there are reasons why Electro Optics is going on a run right now. It's not the only company in this sector that is going on a run, and it will become clear towards the end of this video why these companies are starting to increase in share price. Also have a look at Latin Resources. Their share price up 22%, finished at 5 cents. Dynamic Drill, well, I know it is Dynamic Drill and Blast, but they've changed the name to Dynamic Group Holdings. Their share price was up 19.7%. And finished at 42.5 cents. And then right down the bottom, LBT Innovation, they were up 17% and finished the day at 9 cents. So we'll start off with the best performing company of the day, and that is Australian Vanadium Limited. What happened there? What caused their share price to rise? 40%. On the 16th of March, Australian Vanadium Limited were awarded $49 million in federal funding. This was a manufacturing collaboration grant in regards to their green hydrogen. So this is all about green energy. Sort of surprising, the Australian government is issuing these sort of grants because they are so anti-green energy. Well, I'm sort of making that up. They're not really anti-green energy, but they do seem like they are fairly anti-green energy at this point in time. The market really loved this announcement. That's why share price rose 40% in one day and closed the day at 4.9 cents. Now, this is not the sort of announcement that will seduce me. I prefer those sort of announcements that are financial related, so profit upgrades. So when a company issues a profit upgrade, that means the financial state performance of the company is better than it was previously. This is nothing to do with the financial performance of the company of Australian Vanadium Limited. Now, this will help the potential of this company becoming profitable, operating cash flow in the future, but it is not a guarantee. But $49 million will help this company succeed in the future. And again, it is not a guarantee of success. But just because this announcement does not seduce me, there is one other thing that could seduce me in regards to Australian Vanadium Limited, and that is the chart. How is the market reacting to this company? Is the share price in an uptrend? Is there positive sentiment behind the company? So let's have a look at the chart, and I could take a position in this company simply based off the chart, even though the announcement doesn't seduce me. And first look at Australian Vanadium Limited chart. This is just over a 1 year chart, daily chart. Everything's looking really good with this company. Nice uptrend in the share price over the past year. So we're going from the bottom left to the top right. In fact, the share price has reached at least a 1 year high, closing at 4.9 cents, and has topped the previous high we saw back in the middle of January. And this company does go through these little hype periods. We saw that back in the start of 2021. Share price rose from 1.4 cents to a high of 3.6 cents. And then that hype wanes away and the share price pulls back. We have seen that happen 3 times in the past year. January last year, August last year, and then January this year. So this could happen again. We might see the share price go on a little bit of a run and then the share price pull back. But just looking at the chart here, including the 50-day and 100-day moving averages, everything is in the right trend. Share price is moving up. Moving averages are moving up, which makes sense because the share price is moving up. Moving average should be moving up. Nice increase in volume on this day. So the market really liked this announcement. That's the other thing I really look at is volume. Is the market interested in what the company just released? And that does tell me a lot. The fact that the share price closed right on the previous high at 4.9 cents is an interesting move. So that is a little bit of a resistance level there. If the share price can move above that resistance level and keep on going, that will be a bullish move. Maybe what you might be looking at for in the future is a little pullback and then take a position on that pullback. I've just had a look at the trading of Australian Vanadium Limited after the first 30 minutes of trading on the 17th of March. It's up another 0.2 cents, is right now at 5.1 cents. So it's now at least a 1 year high in the share price. So things are looking really good for Australian Vanadium Limited just by looking at the chart. So this could be a buy based off technical analysis alone. Now onto Latin Resources. I think I've looked at this company once in the past. This is a lithium explorer, and their share price rose 9 cents up 22% to 5 cents. So not 9 cents, 0.9 cents up to 5 cents, up 22% for the day. So if it was up 9 cents, this would be a dramatic rise in the share price. The reason why the market got excited about Latin Resources was all about some drilling. Drilling confirms thick spodumene bearing pegmatites open in all directions. I'm not interested in these sort of announcements. This is simply something to do with drilling, mining, that sort of thing. This sort of announcement alone won't, just like Australian Vanadium, this won't seduce me. I want to see how the market has reacted to the announcement before I come seduced. So let's have a look at how the market reacted to this announcement from Latin Resources in terms of the chart, not in terms of this 1 day 22% rise in the share price. Latin Resources chart, 1 day chart, not 1 day chart, it's almost a 1 year chart, daily chart going back to the start of 2021. Not quite as good looking as Australian Vanadium because instead of going from the bottom left to the top right, there is a bit of a slantward down here, which means the peak hype in this company was actually way back at the start of 2021. The share price reached a high of 10 cents. And round numbers like 10 cents tend to be natural resistance level for all companies. So it's not surprising to see the share price reach 10 cents and then pull back. The share price actually has been falling and has been in a downtrend since August last year. We've seen a couple of times when the share price wants to break out. About 1 month ago, there must have been some good news or perceived good news because the share price opened high. In fact, the share price opened at around 5.1 cents, but there was a lot of selling during that day, and it closed about 4.2 cents. So you can see that one candlestick that is red, and you don't want to see red candlesticks like that, because that means the share price opened near the high and then closed near the low, and that's actually a fairly bearish move. Means there's not any strength in any announcement that company released. This is completely different reaction from the market. It's a green candlestick, which means the share price opened near the low of the day and finished near the high day. Not quite the high, finished at 5 cents, and didn't quite get to that previous high we saw about 1 month ago. But the share price is in right now, right on a nice little resistance level. And that resistance level is around 5.1 cents. If we go back all the way to August last year, the share price has tested that resistance level 3 times in the past, and it's failed all 3 times. So Latin Resources share price needs to get above that resistance level, then pull back to test it, and then pull away again before I even become interested in this company, because there's still a little bit of a negative sentiment in this company. Share price between about 4.5 cents and 5 cents. We'll see a little bit of resistance. It's already experiencing resistance because quite a few shareholders in the past have bought at these or in that range in the past, and they think this company is a dog stock because for some reason a lot of shareholders, a lot of investors want to see the share price rise as soon as they buy in. If the share price falls, they consider that company a dog stock. There should be a fair bit of resistance also at higher levels in between 5 cents and 10 cents, simply because 1 year ago there was a lot of people who bought in at those higher prices. So a little bit of resistance moving forward for Latin Resources to get above 10 cents. That would be a bullish move, getting above 10 cents. Now to Dynamic Group Holdings. I do think this company is really undervalued right now. Ticker code DDB. Their share price rose 7 cents or 19.7 cents and closed the day at 42.5 cents. This was all in regards to a contract award and scope increase. Reverse circulation air core diamond drilling contract, initial 12-month term, additional revenue of between 12 million and 16 million per annum. That's all good. I don't like these sort of announcements either. I'm not seduced by contract awards. We don't know the margins. The margins could be really low, could be like 0.1%. There's a lot of competition for these type of contracts, and sometimes companies will be awarded these contracts and have no margin. So I don't really like to buy into these sort of announcements. In fact, I would be saying that this is more of a selling opportunity for Dynamic Group Holdings, and that will become clearer when we look at the chart. So let's have a look at the chart right now. They also mention that West Australia relaxed border restrictions, enabling access to domestic labour, investment made in securing international specialised labour. So there's less pressure on wages and wage cost. That is one good thing that's happening in this sector in West Australia, because that has been an issue for a lot of companies that do have some operations in that state or that part of the country. Now, this is Dynamic Group Holdings' daily chart from when they listed on the ASX back in August 2020. There was nice share price action from August when they listed all the way to the end of 2021, but the share price has been drifting lower and lower ever since then on really low volume. The market is not at all interested in this company. I've already mentioned that this could have been a selling opportunity, and we have seen that in the past. Whenever the share price does pop up on fairly weak volume, that is the time to sell. We have seen that like 3 or 4 times in the past. The share price gets above the moving averages. That is the time to sell and maybe take your profits or sell out at less of a loss. And right now, even though the share price did increase almost 20%, it is only a 3-week high, at most 2-week high. So two or 3 weeks ago, share price actually was higher than this. So again, a lot of resistance moving forward. There would be some shareholders who bought in at higher prices in the past who now see the opportunity to sell out. So I don't expect the share price of Dynamic Group Holdings to get any higher from here, simply because of the lack of interest in the market. I do think this company is undervalued, but to realize that the market has to get interested in the company for the share price to move higher from here. Now onto a company that I have been following for a long time, over 5-6 years. I was a shareholder of this company at one point in time, sold out for profits, and I've been waiting for this company to gain traction. This is the first sign that their APAS instrument machine is gaining some traction. Purchase order for multiple APAS instrument. So this is something that's really interested me. I am following this company, and I'll continue to follow this company to see if they are able to sell more of these machines. The market did like this announcement. Share price rose 17% and finished the day at 9 cents. However, the perfect time to buy this company would have been previous to this, a few days previous to this, when the share price was about 7.5 cents. And the reason why that would have been an ideal time to buy is when you look at the chart. So let's have a look at the chart. And it's not the prettiest looking chart at all. In fact, it's a fairly ugly looking chart. So let's have a look at that now. When you look at the daily chart for LBT Innovations, this is the 1 year daily chart. Nothing at all exciting here. No trend in the share price. Share price really going sideways. A bit of volatility there. But it does look like share price around about 7 to 7.5 cents is a nice little support level. And the share price just before this announcement was right at 7.7 cents. It was actually at 7.5 cents a few days previous to that. Share price popped up, but you can just see share price is not in an uptrend. Share price has been significantly higher than this in the past 6 to 8 months, so there will be a lot of resistance moving forward. Whenever I see share price pop up like we did see with LBT Innovations, I want it to be at least a 6-month high, not a 2-week high, which is what we're seeing with LBT Innovations. So a lot of resistance moving forward. The one good sign is we did see some good volume coming in, not extreme volume. We actually saw high volume in September, October last year. So nothing to get excited with LBT Innovations right now. I'd like to see the share price go sideways for a long period of time and then the share price to pull away at a 6-month high at least. And that would be a good sign, a bullish run, a bullish sign. So right now, not excited with LBT Innovations, even though the announcement did excite me a little bit. Now onto a company I have been holding for a long time, Electro Optics Systems. Share price has been falling and falling and falling. Now in this sector and defense sector, I'll call Electro Optics as a defense company, even though they do have other sectors, other divisions. The majority of their revenue and profits comes from defense. And defense sector companies on the ASX have performed horribly over the past few years. These companies have been affected by COVID-19, particularly with contracts, a lot of delayed contracts, that sort of thing. So now, and because these companies are hated at the moment, now is the time to think about taking positions in these companies. However, you might be a little bit too late because quite a few of these companies have started to go on runs. This could be the beginning of a long-term run, or it could be just a short to medium-term run. Also, the Ukraine-Russia situation is helping these companies. And I'll actually talk about another company in the next slide. So why did Electro Optics share price rise 22% in one day? When you look at the announcement this company has released, there was no announcements. The last announcement this company released was on the 15th of March. It was all about initial director interest notice from Dina Schiff. So that was not market sensitive. There was a quarterly rebalance for the S&P. That was not really relevant for Electro Optics. And when I say relevant, company-specific relevancy. And then the previous announcement to that was just their financial year 2021 results on the 28th of February. So you can see that there's been no announcements from this company that would, justify or sort of lead to any sort of rationalized reason behind a 22% increase in share price. There must be some other reason behind it. And there is. I've already sort of talked about it. But I'm actually going to have a look at another company, an announcement they released recently to sort of indicate why we might be seeing Electro Optics share price going on a run right now. And that company was X-Tech. The ticker code is XTE. And this company released an interesting announcement on the 7th of March in regards to an urgent order to supply $2.7 million of specialist ballistic armor products. And the magic word here is urgent order. So this was not expected. And I think the whole reason behind this urgent order was because of the conflict in Ukraine in Ukraine because of Russia. And I think that conflict is going on longer than a lot of people thought it would. There was a lot of people who thought that conflict was going to last a few days, and that's it because of the might of the Russian army. But again, when another country invades into another country, I think people underestimate how much passion the country that is being invaded will show. And that's exactly what Ukraine is doing now. They have a lot of passion, and Russia is finding it hard. And that's the reason why X-Tech got this, or possibly one of the reasons why X-Tech got this urgent order to supply specialist ballistic armor products. Share price has risen over 50% for this company, from 16 cents to about 24 cents. In fact, at one point it went over 30 cents. So the market saw this increasing volume, and this is one of the reasons why some of these other defense specialist companies on the ASX are going on runs right now. Doesn't mean it will continue in the future, but I think if the conflict in Ukraine continues for much longer than it is now, we will see these companies potentially going on further runs. Also, with COVID-19 coming to a completion, the world opening up, the headwinds these companies have faced is coming to an end. And I think now could be the time to buy into some of these defense companies like X-Tech, like Optics, Electro Optics, like Orbital, like Austel, probably a few other companies as well. So I've already mentioned Electro Optics share price has been going down and down and down, just like some of these other companies. So this is the 1 year chart for EOS, Electro Optics. And probably the most interesting thing about this particular movement in the share price right now, it could be a selling opportunity for Electro Optics. And the reason I say that is if you go back through the past year, anytime the share price gets in between the 50-day and 100-day moving average, which has happened a few times, particularly start of last year, that was a time to sell. Now, over the past 6 months, the share price has not got in between those two moving averages. In fact, the resistance level has been the 50-day moving average. Every single time the share price of Electro Optics got to the 50-day moving average, that was the time to sell. It has happened about 3 times in the past 6 months. So right now, the share price is in between the two moving averages. So based off what's happened in the past year, this could be a good time to sell. In saying that, the share price has moved higher, and I am talking 30 minutes after the markets have opened. Share price is up another 10%. And so it's trading at about $2.55 or something like that, which would mean the share price is now above the 100-day moving average. Last time we have seen the share price above the 100-day moving average was way back at the start of last year. And at that point in time, share price was going sideways for about 1 month, 2 month period. So there is a possibility that the downtrend we have seen in Electro Optics share price is coming to an end. I think these companies will be facing some really good tailwinds behind them over the next few years, increased defense spending, particularly if the conflict in Russia expands. These companies will be significantly undervalued for where they are right now. So the big question is, are any of those companies I featured in this video a buy right now? I'm going to leave that up to you. I think there is some potential with a few of these companies. A few other companies, I think not right now. You might have to wait a little bit to see if their share price can keep on going. But I think particularly for Dynamic Group Holdings, I don't think the share price will increase from here. I think there is some good selling opportunities. In fact, because a company's shares are illiquidly traded, I think those possibilities have come to an end. You probably would have to sell out near the close of trading on the, what date is it? The 16th of March. So if you think any of these companies are a buy, I'd love to hear your opinion. So leave your opinions in the comment section of this video. And the reason I'm not saying whether these companies are a buy for you and for other investors is because I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.